Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again at the gold market. So yesterday we have talked about the weakness of the gold market, that it's breaking one by the other bullish patterns, and actually it seems that the market is doesn't believe with the bullish possible reversal and make no bets on the possible jump in the CPI numbers. So here's situation stands at first glance. It's more evident. It's just because here we have clear bearish signs. On the daily chart, for example, is that you can see that market totally ignores the hand shorts and it's coming to its failure, it's dropping lower, and this is usually leads to taking out these lows and moving lower. While on the euro currency we have moderate scenario, even market is trying to show the upward direction. It's a bit more sophisticated for trading. At the same time, few tricky moments exist on the gold market as well, and one of the most tricky moments is of course the strong confluence area where market is coming back. So actually the first test of this confluence already has happened right there. It's pullback, the market is dropping lower. We're testing this confluence once again, and if downward breakout will happen, which is mostly is based on the failure of this head and shoulders, we could consider two extensions. First one is 1867, next one 1835. There's two extensions of this most recent swing as a possible target. Of course we could also use this possible downside target either with this ABCD. As you could see, it stands with around 1794. This agreement with 18 even mostly area with this ABCD, and the COP will be in agreement with this first target 1867. So if you plot this A, B, C, top, COP, this will be slightly lower than this one. It's around the lows actually. So there's also target that we have currently on gold market that we'll consider if downside action will continue. But the problem with taking the short position is the existence of the strong confluence area. This market could show not really pleasant jumping around and well, make a bit tricky with this potential entry. So in the current circumstances, the useful tool might be that using the stop sell order. For instance, if market will move below this area and coming closer to this level, theoretically you could try to use stop sell, and you will be you will take the position in the moment of the downside breakout. This is one of the possible ways how it's possible to enter on the short side of the market. But currently, guys, as we come into the CPI, it's always carries the big risk report. Recall what has happened on the non-farm payrolls report. It's actually this is actually the reason why we every time tell that if you're conservative, do not take a risk and just wait when the report will come and then make the decision on position taking. So this is a conservative approach. On the follow time frame chart, nearest target that we have, this market is dropping low, is 19 even. This is next XOP with this more extended AB leg. Yesterday we were considering this one, ABC top, but market already has completed the XOP yesterday that we talked about. Now we take another ABCD pattern with the target around 19 even. So this target stands above this area. So potentially if market will reach it, so maybe it will be some minor pullback. It also could be used for theoretically considering taking the short position. But as I said, everything will depend on the CPI numbers. On the hourly chart, market is forming a kind of wedge pattern, and here actually we also could watch for some bounce to some retracement levels. But all the stuff is about the bearish position. For the bulls, currently, well, I can't make happy anyone because actually we do not have any bullish patterns. So one thing that bulls theoretically could consider is a possible head and shoulders pattern if it will be formed, if market will start showing the same reaction on the same strong confluence area with the possible this pattern. If CPI will be relatively low, in this case it might be action against the United States dollar, and gold could show the second attempt of the rebound up from the confluence support that we have on the daily chart. But with the recent performance, I would say that the chances for that really not significant. For the bulls, I do not see any other possible features for a position taking. So that being said, overall technical picture looks bearish. So, but for a position taking, and especially before the CPI report, we need a bit more confidence around the failure of this daily pattern. So market should keep going lower, and I prefer to take the position in the moment when the market will be below the confluence support. It's 1904, 1910 area. Maybe using the stop sell order near the lows, somewhere in this area, with the possible downward breakout of this level and moving to the next target around 1867. So that's approximately how it could be traded. If you intend to take the position after CPI report, then this is just on reaction. So any pullback, if CPI will be lower than expected, just watch for the levels that we have specified on lower time frames for position taking. If it will be stronger, well, in this case, probably it will be better to wait for taking the short position, because bulls could get their chance with this possible reaction. So it's a bit difficult right now, it's just because of we depend on the numbers. But approximately this is few patterns that we could keep an eye on and see what will happen.